What it do, 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 what it does, man. It's your boy Casino Trades, man. We back with another trading recap. So we ended up going 3-0 today. Marvelous day. So let's get right into it. So today we opened up here. So let's break this down first of all. So, like I said, the market, once if you're expecting it to be bullish, this is why I'm bullish. First of all, we have all of this trend line liquidity, right? Also is called low resistance liquidity, right? So this is my target, these relative highs. And you know what I always say, if I wanted to go higher, I want to see it go lower first, right? So look how we got all of this sell side liquidity here. We have all of this sell side liquidity right here. Yesterday's lows right here. So now, like I said, the market has to do four things at all time, which is generate liquidity, which is generating this high and these lows, and then it has to pull back to equilibrium. So if you use a fib, right, and you get from this low to this high, look where equilibrium is. I just can't make this up. Equilibrium is literally right here. So you see the 50%. So this is equilibrium from this high to this low. So the market has to pull back, right? The market just can't keep going up and up and up and up and up. The market has to pull up, pull back, then go. So as it's been running up so much, remember, and from this low to this high, we're in a premium, right? So the market has to go down to a discount, which is underneath the 50% of this range, right? To a discount equilibrium of the range to go higher, because we know for it to go higher, I'm bullish. You want to see it go lower first, preferably to midnight. I'm sorry, preferably to the 50% of the range. And so we can be in a discount, right? Because the upper half is a premium and the lower half is a discount. Because we know the best long plays happen when you're in a discount. The best short plays happen when you're in a premium. So look how we got the perfect sweep. We got the perfect sweep of both sell side liquidity into a fair value. So into a PD array, which is a fair value gap. This is literally was just a A+ day. So let's zoom in. Look at the fair value gap. So if I go to look at the fair value gap, that's right here. Look how we trade right into a bullish fair value gap. So we got a sweep into a key area, which is this bullish fair value gap. And this happened in the pre-market. And look where my 8:30 open is. Where's my midnight open is? My 8:30 is here, right here, and my midnight is up here. So I understand that I'm in a discount. I'm in a extremely deep discount because I'm underneath the opening, underneath the 8:30 open, and underneath the midnight. So I understand that my best longs happen when I'm in an extremely deep discount. So we go down to a lower time frame. You will see this is the first play that I caught. So you see how perfectly it respects the order. I mean the 15-minute bullish fair value gap, and this is where we got the sweep right here. Look at the sweep into the key zone right at 8:30 open. So I want to see once we get above 8:30 open, I want to see it hold that support. So we have a low. So we have a low, high, lower low, higher high. So that's why I caught my first play right there at the bullish breaker. So we have a lot of confluences right here. Let's break this down. So we have low, high, lower low. Once we get above here, higher high. So that's the bullish breaker. Look how it comes right into it. Comes right into it and runs. We have an order block right here. So you have this down close candle right here. Look how we close above. Order block. We have another order block right here with all of these down close candles right here. Once we get above, look how we close right here. See how we close above it here? Comes down right to this order block. Remember, every down close candle you want to see it hold as support. So look how we get above here. Then we come right down and touch it. Long. So we got the order block and the bullish breaker. And we have a mitigation block also, right? We have a low, high, breaker. So we have multiple breakers. We have one here, low, high, lower, low, high, high. Then we have this breaker, low, high, lower, low, higher, high, coupled with the order block. And we ran. This is my first trade I caught today. I went along literally right here, and I was just targeting this high that's right here. Boom. So I caught that right at the open. That was my first trade today. Then after that, we have another breaker. This was the second play I caught. We have a low, high, lower low, higher high. Look how we come right into the breaker. Boom. This is my trade. And I caught this right here to this buy side liquidity zone right here. So today was just a breaker day. Like, right here, boom. And I was targeting. So that was that was my second trade, stop loss right below. Lovely trade. Look how we get the close, retest, runs up. Look, then we come right back to the bullish breaker. Did not ended up catching. I know I definitely caught this play too. So let's go to a 1 minute. Also, you see the 5 minute order block. So we have this down close candle right here, this bearish candle. Look how we close above right here, creating an order block outside of the bullish breaker. So this is a 5 minute bullish breaker, so it's a higher time frame breaker. So you see that's why it ran so far. Look how we generate. We come up here and generate this high. Then we remember the market has to do what at all times? It has to generate liquidity and it has to pull back to an inefficiency. Look how it comes here, pops up, generates this high, and then look what it do. It pulls right back to an inefficiency or to a PD rate, which is this bullish breaker, and you see the little fair value gap that's right here. And then it goes. It does it all the time. So this is where I got my trade at. Oh, so hold on. Let me draw the 5 minute order block from the opening price to the top wick. It's the OB. So now let me go to a 1 minute and show you what I caught my play right here. So I posted all 3 plays on Instagram. So you see the order blocks wick right here, and then we have a 1 minute order block. So you see the consecutive bearish candles. You see how we close above. Look how we come down. Look, all this is generated highs. Look at this, generated high, generated high, generated high. These highs are so smooth, right? Look at these lows right here. These lows are smooth. So this is accumulation, back and forth, back and forth, back and forth, back and forth. Manipulation. Let me just draw right quick so you can see what I'm talking about. So we have the accumulation, respecting the zone, right? It's accumulating, right? It's generating highs and it's generating lows. And then we manipulate lower, right? We accumulate, manipulate, and then we distribute. Boom. Right? So that was the play I caught right here. I was waiting for a sweep of internal sell side liquidity into a key PD rate, which is this bullish breaker, coupled with the 5 minute bullish order block. Look how the body's in the upper half. Sweep internal. Now we got the buy side to go hunt. Right? So we go up. I get my long right here, and we just. Babe, what the fuck? Why you keep calling? I'm on a class right now. I understand. I'm on a class right now, so I'm ignoring it. It's for a reason. I understand. All right, what's up? What's up? Okay, I'm sorry. I'm sorry. What's up? All right. So, so we come down, we sweep out this sell side, this internal sell side. Now I'm looking for the inverse, the opposing fair value gap to get disrespected, which was right there. But you see, we kind of cut it outside the lines a little bit. So it did a kind of like a high resistance. See, I was holding and then it came down, but then eventually popped back up. Then you see how it ran. So I was in a little drawdown. Good thing I put my stop loss below this low, because if not, would have got stopped out. So this is what I mean. The market has to generate liquidity. So remember, the market it's going to generate this high and the low. Then the market has to pull back to an inefficiency or equilibrium of the range. So it generated the highs, generated the lows. Now it pulls back to fair value gap or a PD array, doing the AMD model, manipulation, internal sweep, then we go. Then it has to hunt through the last part, right? It's going to it's going to generate liquidity. Then it's going to pull back to a inefficiency or a PD array or 50% of a range, right? Preferably sweep into a higher time frame PD array, and then what's left is the highs. The last thing to hunt the highs. So that was today's order flow. Ended up marvelous day. So appreciate y'all for tuning in, and let's get it.